Welcome, dear traders. As the US stock markets were closed yesterday, stocks in the Asia-Pacific region showed mixed trading. Due to the lack of signals from Wall Street, the region's stock indexes were focused on the local news. First of all, investors closely watched key economic data from Japan and the new concerns about the debt crisis in China. Japan's leading economic index increased by 0.2% to 108.9 in September. However, compared to the level of 109.20 in August, it still showed a decline. This indicator is used to gauge the economic outlook for a few months ahead, taking into account such data as job offers and consumer sentiment. The current level of the index reflects the decline in production in Japan. At the same time, consumer confidence weakened to a 6-month low due to the deteriorated expectations in income growth, employment, overall livelihood, and willingness to buy. At the same time, Japan's early inflation rate accelerated to 3.3% in October, pushing prices to their highest level since July. Core inflation also increased from a 13-month low in September. It was 2.9% in October. In general, core prices in the country have been stubbornly far from the Bank of Japan's 2% target for 19 months in a row. In addition, the country should see a significant wage increase at the beginning of the next year. If that happens, inflation may become even more stable. As a result, markets are expecting a hawkish move by the Bank of Japan against the backdrop of a persistent inflation. The regulator is likely to be forced to end its negative interest rate policy as early as the first months of 2024. The Japanese currency strengthened to 149.20 after the release of the interest rate data. However, the forecast for the US interest rates are also significant for forex traders. The US regulator will make its monetary policy adjustments earlier. As a result, after some consolidation near 149.25, the dollar-yen pair fell to hold near this level. However, its intraday range of 149.10 and 149.70 in the Asian and European trading remained in the bearish zone. Meanwhile, this balance of forces can be explained by the weakness of the US dollar rather than by the yen strengthening. From a technical point of view, the pair has the potential to rise above 149.75. The weekly high, on the other hand, the United States will release data on the level of business activity in the services and manufacturing sectors today, and the currency market's reaction to these indicators may drag the dollar-yen pair to the psychological level of 150. The US dollar may leave its narrow range of 103.70 and 103.80 and test new highs on a bullish momentum. In the early Friday trading, the greenback has already soared to 103.84 against its G6 counterparts. As a result, the greenback extended the boundaries of its intraday range of 103.60 and 103.80. In general, the US dollar index is trading at its lowest level in 2.5 months today. With the Wall Street having a short trading session today, currencies are likely to trade tightly. And due to low liquidity, volatility in the forex market may increase. Meanwhile, fears of new defaults in China have already increased. The problem looks even more ominous that the financial sector has been sucked into a vortex of a peeling debt. Chinese company Zhongji Enterprise Group told investors that it's currently insolvent. The company is the main player in the Chinese shadow banking sector and has a major influence on the country's real estate sector. In particular, high debt problems have been haunting the sector since as early as 2020. Developer defaults began in late 2021 and have since hindered the active growth of the Chinese economy and negatively affected neighboring markets. The Australian dollar reversed its decline on Wednesday after Reserve Bank Governor Michelle Bullock said that inflation was a homegrown problem and higher interest rates were likely to continue. At the time, the Aussie rose to a high of 0.6575 before slipping back to 0.6560. Since then, the Australian dollar has been trading within the range of 0.6550 and 0.6572, waiting for new signals to move higher or lower. At the same time, the New Zealand dollar is showing solid growth within the daily range of 0.6042 and 0.6064. The Kiwi is maintaining a bullish trend for the second consecutive session and has already risen to 0.6060. The New Zealand currency also strengthened on expectations of new aggressive decisions by the country's central bank. The fact is that a new coalition government in Wellington has made a number of changes in policy. As a result, the regulator can now focus only on price stability, and this means that at its meeting on November 29, the Reserve Bank of New Zealand may raise interest rates and reinforce the national currency against the greenback. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you next time.